Welcome, everybody, and thank you for coming back and listening to the latest installment of MSP Business School. We've got our very special guest, Abe Garver, with us today. But before we go a little bit deeper into that conversation, I want to say hi to Tim and Rob. How you guys doing today?
Doing very well. Very well.
I get excited when we do this every 6 months. Abe has been a wealth of knowledge. I've enjoyed getting to know him and watching him flourish within the industry. I think he's become Mr. M&A out there. And, we're excited that he's willing to join us every few months and really kind of give us the state of what's going on in the M&A market, and hopefully provide a little bit of education as well to aspiring, MSP leaders who want to partake in a platform buy, whether as an acquired company or as maybe even a platform leader down the road. And Abe's always got pearls of wisdom on how you can prepare yourself for that. So with that said, I want to welcome Abe Garver from Focus Investment Banking, and thanks for coming back to the show.
Thank you so much, Brian, and thanks, Rob, and thanks, Tim.
Yeah. Great to have you.
Just start off. Yeah. Thanks. I think this is the third time I've been on, and really, just really enjoy getting in this format to talk about what's changed kind of over the past 6 months in the M&A market for MSPs. And maybe a great place to start would just be kind of where we've been over the past, we'll talk about where we've been, where we are now, 2, and then 3, kind of where we're going. Where we've been in the past, and I'm going to quickly share the screen. So I'm sharing on the screen over the past 2.5 years, Focus's MSP team that I lead, we've advised on MSP transactions with 47 parties. On the right-hand side, and we'll get into this in this discussion, you see Domain in Tier 1 as an example of 2 companies that were not large enough individually to be a private equity-backed platform, but did a merger of equals and reached the size so that a private equity group could come in. Many of the transactions we've done, you look to the right, ECS and MyIT rebranded as the Purple Guys, Intivix, PC Miracles, ITS. Many of these transactions have involved companies in the 1 to 1.5 million EBITDA range. Kind of many of the companies in the audience, finding, for instance, a peer group member, maybe peer group members with another business similar to yours, and combining together. There's a piece that we did, another one I'll pull up right here on the screen and read. Domain and Tier 1 that I just mentioned, 8 things appealed to the private equity group, putting these 2 businesses together. There's a cultural fit, geographic, strategic, financial, low integration risk, similar tech stack, leadership gap being filled. One of the founder CEOs was retiring, and also not in this case, but in some, a reduction of customer concentration. If you've got, so by combining, they were able to basically hit this, springboard where private equity money could come in, and their valuations went up as a result of doing this transaction. So I'll pause there and just say there's been, a whole lot of, kind of a land grab going on, for the past, call it 2.5, 3 years. And I'll pause there, but that's kind of where we've been in the past.
Yeah, so, like one of the things I'm hearing there, and one of the biggest questions that I know I get when people are talking about M&A, and certainly, asking me about your thoughts, Abe, and to relay, where do I need to be to potentially be in that lead dog seat of being the, top end of the private equity platform spectrum? And it sounds like, based on what you were sharing there, it really needs to be probably your revenues need to be somewhere in the neighborhood of $3 million if we're really talking about how those combinations went. And I think that's, I think I'd love to hear your take on what are the characteristics of somebody that's a platform leader, the people that are basically forming that platform and then going to bring on the add-ons. And then what are the characteristics that you got to look into yourself to say, maybe I'm not the right guy to lead, but I can certainly do well if I become one of the acquired companies and offer my value there. So I'd love to get your take on that personally.
Mm-hmm. I like to see for a platform, I like to see if best in class is 20% EBITDA, I like to see 10 million of revenue, a little more than 10 million of revenue. So I'm going to have 2 million of EBITDA. And that's kind of the floor starting size for a private equity group to back it as a platform. What does, it comes out pretty quickly when I'm on the phone with someone, if they say, if they're interested in another 4 or 5 years and rolling a substantial amount of equity when they're selling, that smells and feels like a platform leader to me. They're going to be there to do M&A, to do integration. Someone that's 65 that's ready to retire or is burned out is signaling to me that that's probably, we need to find another party to really lead the platform, although they may be bringing the asset to the table. But it is, we can, from a valuation perspective, the advice I hear, from every M&A buyer is just be transparent with us. Tell us the truth. Don't try to tell us what we want to hear, thinking it's going to make your valuation higher. They're 40 tier one buyers right now for a process I just started late last night, early this morning. And so there are 40 different flavors of what people want. And you telling kind of the seller telling us what they really want is the best way to, kind of for everybody to get what they're looking for, including a high valuation.
So what would you say is so like Brian talked about it from the leader side, I want to talk about it from the add-on side, the smaller MSP who's maybe peer group members with, 1 or 2 other people that are looking, hey, let's get this thing together and then come to Abe. What are you looking for in that combination?
I love what you said at the beginning, which is peer group member. My number one for years, my number one most important way to increase your valuation is join and be in a peer group. The Evolve, IT Nation Evolve peer groups that meet quarterly, the next one's coming up in Denver in August, are phenomenal ways to grow the valuation of your business. And so I would love to hear from somebody, hey Abe, I'm in a peer group. They start the sentence off that way, and there's a lot of different moves we can make, because inevitably they know a lot of potential kind of merger of equal partners that are their same size
and personality.
Personality, similar tech stack, kind of cultural fit. They may know each other's families. Like that's if I'm looking for building blocks of strong relationships, tops my list.
Wow.
I'd rather have a subpar MSP that is well known by other peers in the peer group, in their peer group. So kind of three primary peer groups, Evolve, the IT Nation Evolve, True Methods with Gary Pica, and then also the Taylor Business Group. I've had a couple really great clients, and some even double dip in multiple peer groups.
Yeah, that's something that we've actually seen more and more is the multiple peer groups, which I think was somewhat foreign to us, at least up until a couple of years ago. And oddly enough, I think, it's the third time you've been on, I think all 3 times it's gravitated at some point to, hey, be a peer group. I mean, look, we have definitely seen, Rob and I specifically, we've experienced it with some of our clients in the past where they're in a peer group together and they've merged, and they just want to be bigger, better, faster. They condense some of their expenses, and it makes them more attractive to the next company that they're looking to get acquired by. So it's it's a very interesting world from that standpoint.
Rob, to your question about the add-ons, the best result that I've heard, it was kind of like the textbook incredible result for someone that sold as an add-on. Thrive Networks, backed by MC Partners at the time, their first acquisition, the seller rolled 1.5 million of equity. And that 1.5 million, when they recapitalized and Court Square came in, was worth, I'm told, 10 million, or 6.6 times the amount of the roll. So as we think about, I would say 7 is as high as I've heard, kind of in the MSP market. And, I'd say people are targeting between 3 and 6 times cash, and they're using leverage. They're using leverage to kind of get better returns with the equity. But for somebody that's selling as an add-on, to the extent they can roll, especially early on, like we had the Willis Canty Tech example, he had just gotten a PE investment. The earlier you can roll, there's an opportunity to get 3 times, 4 or 5 times your money. And so that really makes, like, it's not an all or nothing. You've got to be a platform or you're never going to max out. If I go to 40 different buyers for you and we pick the right kind of buyer that's early on in their life cycle, that you roll a material amount of money, we can, without you, if you're retiring, we can, without you becoming a platform, still find a nice path to maximize value.
So that's an interesting point you're bringing up there. Are you finding now that some of the more established longer term platforms are finding it a little bit harder to make acquisitions because the add-on seller is really looking at, hey, where am I going to maximize the most long term, and do I want to be part of something earlier and take a little more risk and hope that what I enter into materializes? Or are you still seeing pretty steady buying habits on both sides, both the established and some of the newer platforms out there?
The private equity group, if you're 65 retiring 100%, they want to take your equity out, and you can sell 100% of your company. But if you're going to be active, you really need to be active for them to want to let you roll equity. They want kind of active capital. And so that's really the consideration is, hey, do you have an appetite? You as an add-on seller could say, I love going to the quarterly peer group meetings, my community, my friends. I want to keep doing that after the sale, and I want to recruit more add-on targets to the platform. I'd like to roll 30-40% of my equity and it be worth 4 or 5 times when I roll. Like that's where, just being transparent and honest with us and the buyer is so important. Like we'll solve highest and best, kind of case for you. We just need to know what it is, know what you want to accomplish.
Wow. So I would think if you're not in a peer group and you're trying to do an add-on and you're coming into this type of thing, are you finding that you have to manage a lot of the personality? You went from being CEO of your $1.5 million company and now you're rolling up. How is that part, accounted for in the new culture experience?
And in that example, can you describe, are we looking at it from the point of view of the add-on?
Yeah, so the add-on comes in, younger guy, doesn't want to sell out and move away. He wants to come in and be a part of the group. Are they all part of the leadership team? If you add in, are you immediately part of the board or part of the leadership team and you get your say in the voting, or are you just a cog in the wheel with your particular silo of a company?
I mean, the ego match is what you're talking about,
great
right?
question. Yeah. Iconic before it sold to Integris was this 4-way merger, and each of the principals really picked a role to be part of the consolidated platform. so a lot of it, happens, most of it happens prior to the transaction closing. People will say, hey, I've got an aptitude for being CEO, or I have an aptitude for kind of, let's say, chief revenue officer, or there's some swim lane that they're really good at. And so that's kind of figured out. And really it's part of what when we're putting the puzzle together, we're solving for each one of those spots along the way. We're solving for that so that we want to go out and recruit for weaknesses that we might have.
But I think, Rob, correct me if I'm wrong, you might have been talking about it a little bit further down the line too. Like, I'm CEO of my company. That initial group has been established as leadership. I'm coming in as maybe the 7th or 8th or 10th buy for that organization. Have you seen a lot of conflict where owners have come into those scenarios where they didn't really realize how much they were relinquishing?
Right.
And obviously at that point, there were already set leadership roles. They still might be able to jump into a very influential role, don't get me wrong, but they do have to kind of check their ego at the door a little bit and kind of learn how to meld. Have you seen that gone sideways? That's kind of more a question I'm interested in understanding too.
Yeah, kind of both ways. Many people just, I'd say like the majority say, hey, I'm so used to being CEO myself. If I'm not any longer, I can't really have a boss. It doesn't work. And those, there's a prevalence of that. I saw in the past 6 months, one of the neatest kind of like repurposing of a career. I saw Anada, who sold his business to Thrive, become Robb, the CEO's right-hand person for M&A. And so when my sell-side client in Florida, DSM, which this transaction was just announced, when we all got together and met for the first time, Anada came with Robb and said, I sold my company, he sold as an add-on, enrolled equity. And he came in, sat down in the conference room with Robb and my client and said, I sold equity and it's been a great deal. I love the culture. And the person was like a reference for the transaction. And it gives me chills. Sounds funny to say that, but like the team of Robb and Anada, it's hard to compete against that. Like when you have a founder CEO that's sold as an add-on, that's happy, that's describing kind of the strategy. So there's really neat ways to get plugged in. It's not always going to be a mismatch. And congratulations and hats off to Thrive and Robb and Anada for doing that so nicely.
Yeah, very cool. So just to change gears slightly, what's been your experience over, look, inflation is going up. And there are concerns or the beginning stages of talks about going into another recession. I recently read your article about good, better, best, and as far as how you're trying to group everybody together, like how has that impacted just everything that you've been focused on over the last 6 to 8 months? Yeah,
I mean, I had a pretty big concern, and I've never liked that word concern. My dad used to use it with me a lot. We're concerned about you. I had a pretty big concern about if interest rates the Fed's hiked 3/4 of a point. I really wanted to talk firsthand to the top 2 lenders to MSP platforms, and that's Patrick at AllianceBernstein Private Credit, and then also Reed at Deerpath. And my question to them was, guys, this has been an incredible market for 2.5 years, 47 parties, transactions with 47 parties. Is this over? And what they told me, I felt like I had to ask the question on behalf of the overall, our community. It's a question that had to be asked, and I didn't know the answer. And what they said was, Abe, kind of all of these are variable loans. they price, they have a floor of the lower of 1% or LIBOR, and LIBOR was significantly below 1%. So all the loans were at 1%. LIBOR is now around 2, a little over 2. So basically, there's only been, with all of the noise and everything else, there's only been a 1% increase in interest rates for MSPs. And it's, when you think about, these are interest-only loans, they're not principal. It's not really materially changing the economics and getting, you know, kind of, it's not yet changing the demand side. So it was kind of a sigh of relief when we had that, you know, as I had those conversations and wanted to get the information out to the market as quickly, you know, as possible. The big thing, though, that has changed, you know, when we first started talking, the average private equity group that was buying an MSP platform was about 500, had raised about 500 million. And the rule of thumb is divide that by 10. They're going to make 10 platform investments of 50, kind of 50 each. Yeah. Now, instead of 500, I have, you know, 25 to 30 private equity groups that have raised funds that are $1 billion, $1.5 billion, $2 billion. So you think about it, there's way more capital to buy these assets. And we don't have any, we have very few assets to buy, which is what's forcing these mergers of equal to get to the size that a PE group can make a platform investment. So that's kind of the, you know, where we are now.
So when you say that there's less assets to buy, but yet the market's hot, are you actually seeing that there are folks that are really holding tight and seeing where the market goes right now? Or I would think this might be a time where they're looking at getting out on the top, if the market is so healthy on the MSP side before the, you know, inflation changes, you know, here, or maybe money becomes harder to get. I mean, kind of help us understand that a little bit, because it kind of seems counter to what we're seeing out in the marketplace.
They're more really driven by the length of, when that 500 million or when the $1 billion fund is raised, it's going to take 7, 8, 9 years. It's a kind of life cycle. They raise the money and then they're going to go deploy it into those 10 platforms. The platforms on average, not just MSP, but overall, are 4.9 years in duration. And then they're going to have to go through a sale process and trade to someone else. So really the MSP platforms are behaving completely independent of interest rates. They're formed. It's going to be a 3, 4, 5 year investment. It'll recapitalize again, like Thrive, Antiva, Cortelligent. Another private equity group goes in, and then it's going to keep going for another 4 or 5 years. And so that is really not changing. There's not people running for the exit, but there are more people trying to get in because of all of these, the large size of the funds that are raised. So it caused me to ask another question, which was, here's this concern word again. My big concern was, are rates going to, you know, kind of spoil this? My second concern is my $1 billion, $1.5 billion, $2 billion private equity group. They raised this money. There's something called the denominator effect, where if the public market, if I'm a pension fund and my public investments have gone down, publicly traded investments have gone down, do I have to give back some of my private equity money to rebalance it? And I was scared to ask the question, but I asked it to kind of multiple private equity groups, and they said, no, Abe, when we raised $1 billion, it's raised, it's committed, we don't have to give it back. So the money's not going away. Interest rates aren't really, you know, material here. We have, with the excess demand and less supply, think about where we're going in the future. We're still early rounds in this, kind of consolidation. And we are moving from a land grab to, what I've predicted is a platform grab. The assets that have been in the market and I'll just share on the screen kind of these assets that first got private equity money in 2016, 17. They've begun to recapitalize, meaning the next larger private equity group comes in. So we're really now, it's a platform grab. I've run this out to February of 2022, and we're still making about 15 platforms, MSP platforms a year.
Wow.
All right, Abe, so I got a two-parter here. All right.
Yeah.
Okay, first, I'm a $2 million MSP, right? And I'm looking to get a part of this, this platform grab, and I want to get in there. What's the number one thing that I should be working on before I come to you inside my company? Like, I saw that, you look at growth over employees, you look at the Alexa rating, and what should I be doing to get myself in a position to get to this grab? Because I'm looking at it like, this is great for my future. This is part of my retirement, is like getting into one of these, type of groups. So what do I got to do?
There's a really neat article. Here it is on Channel E to E right now, called 5 MSP Valuation Drivers. I can share it on the screen. It's written by a friend of mine, Ramsey at Evergreen Services, and Evergreen has acquired, I think 50 add-ons. And Ramsey does a great job in this article and of really saying kind of, here are the 5 most important things to him as a buyer, and here's the takeaway for a business owner. And I'd say, kind of directing people to this Ramsey Evergreen Services, and the title of the article is 5 MSP Valuation Drivers. That would be, just that's a super place to start. That and your peer, and Ramsey and Evergreen Services goes to all the IT Nation Evolved peer groups. So be at the peer group, and come to the peer group, and you'll have access to all sorts of information like that too.
Okay.
But in general, kind of, all of our advice is focus on recurring revenue, the recurring over the project or over the product revenue. Focus on organic growth over M&A growth. And I say that as a M&A advisor.
Okay.
Wow, I didn't know
organic
that.
growth is more value. Yeah, organic growth is more, and it's in the same way there's Brian and I had a nice conversation about this. In the same way there's operational maturity level for MSPs, their sales maturity level, and having organic growth is knock it out of the park, way more important than the M&A growth. And I think it's genius what the 2-3 of you are doing to help increase the sales maturity level of MSPs, because it's a huge driver of valuation, more so than the organic growth.
Wow, I didn't know that.
Yeah.
Thanks for the softball.
We love the plug.
We got
Wow, I
3
had
people
no
on the
idea.
phone here that can actually smash the hell out of that softball if anybody wants to take a crack at
Okay.
it.
Why don't you take a start there?
And I'm all about it. You'll make all of these MSPs worth more. I mean, if they're focused on that, it's perfect.
Yeah. Well, and that's, I mean, just, to talk about that, and the sales maturity app that or just system that we're working on and coming out with. I mean, we found time and time again, Rob and I specifically, and especially since doing this and getting more involved with Brian over the last couple of years, just a lot of MSPs, they don't always focus on the appropriate things in the right order, right? And we just found that if you focus on your sales growth in an appropriate way, and really focus on climbing the pyramid, not only does it make you better as an MSP, more profitable as an MSP, but it gives you just a great opportunity to have a defined department that is not easy to come by in this industry. And we see where we've seen it time and time again. MSPs are very close. They only need a few tweaks. Those tweaks might be somewhat major, but once they are accomplished, they've got a well-defined, well-oiled sales machine that's predictable. And I think that's a majority of the people listening. I feel like that's one common goal that a lot of them have, right? So.
I mean, simply put, a consistent, I can understand where you're coming from, Abe, because a consistent sales engine can make up for shortfalls in other areas of your business operationally. And if you've got a consistent sales engine, it becomes much easier to pretty the picture as you start looking at exit and bring somebody in. If you brought somebody like yourself in that can look at a company and say, these are the areas that you need to trim the fat, and this is what you need to do in order to get there. As long as those sales are humming, there's consistency there, the revenues will stay stable and grow over that time. And, I got to give Tim and Rob credit because they're really the brains behind the intelligence within the system. Our side of the coin is really bringing the platform together and helping bring their thoughts out to the market. Mm-hmm. But we've seen that, especially at the lower ends of the spectrum, folks need a do it ourselves, but with guidance type approach before they're ready to enter into the peer groups and some of those stages. And that's really where we're trying to help. And then, of course, for those that are at the bigger picture, if they can start getting their financials together and show sales growth in a very representative manner, that's easy for somebody like you to be able to digest. That's just a home run, right, for everybody concerned, because sales sometimes can get hidden in a P&L or a balance sheet, right? Because it's how much
especially with M&A, it's like, what's the organic growth and what's came from buying your neighbor? Yeah.
Sometimes those neighbor buys are done in such a weird way you never even know they happen.
Yeah. The beauty of so many of these peer groups is they set it up where there's not geographic competition in the 12-person peer group. And so you hear somebody's in Florida and they figured out the way to really sell new services, and they tell their peer group member, and that coupled with your platform that you're designing, I think that's gold. I mean, having a continual news source of what's the latest way to get organic growth, and then a platform to help, just put discipline into it and maturity is just a dynamite combination to increase valuation.
Well, as this episode goes live, that platform will be accessible. So we'd love to have conversations with folks, but we're not here for us today, but thank you. We're here for you. This is your forum. What I'd love to do is, we're getting near the end of our time. Do you have any closing thoughts, Abe, you want to put out there before we wrap up today?
I would just say, again, I'll hit the peer groups, join the peer groups, number one. Number two, become notable, increase your notoriety there's the CRN 500, the MSP 501. I like the Inc. 5000, IT services. A fourth category is the Channel E2E top 100 vertical. Help make yourself known and notable, and that will draw more people, more talent, more friends to you, and increase your valuation just from a kind of notoriety perspective.
So I'm hearing a little build your company brand and maybe a little personal brand in there too.
Yeah, circle of influence.
Yeah, exactly.
Yep, you do it in sales. I guess you got to do it here as well. Yep. Circle of influence helps. That brings us about to the end here. So, I mean, just to kind of sum up here, peer group is always the number one thing we're always preaching on here. The link that we will be providing was the 5 MSP valuation drivers. I thought that was a pretty smart, link that we could put in there. And just when you're talking to Abe, make sure you tell him the truth about what you're looking to do, so he can put you to one of those 40 different, groups out there that's looking for your business. Fellas, anything else before we kind of part ways here?
It's just on my end, I'm just glad to have you back. First three-peat. So
it is the first three-peat.
Yeah. You are
Okay.
You are
looking forward to 4.
Yeah,
We'll go for 4 in the
Sunday.
holiday, and then I think when you come back the 5th time, what's it on Saturday Night Live? We got to get you a jacket.
Yeah.
Got to get you the smoking jacket.
Nice.
Jacket, the old pipe.
Maybe we'll just have to find a way that we do the 5th one live together.
Yeah, that would be awesome.
But that said, hey, Abe, always thank you. Appreciate you joining us as always. And
we will be including this, up on our podcast. We will put his LinkedIn profile in it with, a link as well. And this will be up on mspbusinessschool.com and anywhere that you get your podcast, to include YouTube. So, fellas, Abe, again, great episode. Thanks a lot. And I wish you guys all the best.
Yeah.
Speak soon. Thank you.
Yeah.